Welcome to Money Mindset. In today's video, we're going to cover the top 5 ways to make money in the stock market. Whether you're a beginner or looking to improve your trading strategies, these methods can help you grow your wealth. Stick around for actionable insights, and don't forget to like this video and subscribe for more financial tips. The stock market offers various ways for investors to generate wealth, but with the potential for significant returns comes the risk of losses. Understanding different strategies for making money in the stock market can help you navigate its complexities and make informed decisions. Whether you're looking for short-term gains or long-term growth, there are methods that cater to different levels of experience and risk tolerance. Below are 5 of the top ways to make money in the stock market. 1. Buy and hold investing. Buy and hold investing is one of the simplest and most widely used strategies for long-term growth in the stock market. This approach involves purchasing stocks with strong potential for long-term appreciation and holding on to them for an extended period, often years or even decades. Investors who employ this strategy believe that over time, the stock market generally increases in value despite short-term fluctuations. The key to success with this strategy is selecting high-quality stocks of companies with solid financials, consistent earnings growth, and a competitive advantage in their industry. The most successful buy and hold investors often look for blue-chip stocks, such as those in the S&P 500 index, which represent well-established, financially stable companies. By reinvesting dividends and staying patient, buy and hold investors can benefit from compound growth, turning a modest initial investment into a substantial nest egg over time. 2. Dividend investing. Dividend investing is a strategy where investors focus on buying stocks that regularly pay dividends. A dividend is a portion of a company's earnings paid out to shareholders, typically on a quarterly basis. By investing in dividend-paying stocks, you can generate a steady stream of income in addition to potential capital appreciation. This strategy works best for those looking for a consistent cash flow and those who prefer a less volatile investment strategy. Many dividend-paying stocks belong to well-established, stable companies with a history of profitability. Investors can either reinvest their dividends to buy more shares, which accelerates compound growth, or take the dividend payments as income. Dividend investing is particularly attractive to retirees or anyone looking for passive income. 3. Trading stocks, day trading, and swing trading. Stock trading involves buying and selling stocks in the short term, with the goal of capitalizing on price fluctuations within a specific period. There are 2 common forms of stock trading: day trading and swing trading. Day trading. Day trading is a high-risk, high-reward strategy that involves buying and selling stocks within the same trading day. Traders aim to capitalize on small price fluctuations throughout the day, often making multiple trades to take advantage of short-term trends. This strategy requires quick decision-making, strong technical analysis skills, and a solid understanding of market patterns. Swing trading. Swing trading, on the other hand, involves holding on to stocks for several days or weeks in an attempt to profit from price swings. Traders use both technical analysis, studying price charts and market trends, and fundamental analysis, examining company financials and news, to predict price movements. Swing traders aim to buy low and sell high, capitalizing on short to medium-term price fluctuations. Why it works. While stock trading can be more volatile and risky than other strategies, it offers the potential for significant returns in a shorter time frame. Active traders are also able to use leverage, borrowing money to amplify their investments, which can enhance profits when done correctly. However, trading requires significant knowledge, discipline, and risk management, as the stock market can be unpredictable, and losses can add up quickly. 4. Growth investing. Growth investing is a strategy where investors seek out stocks of companies that are expected to grow at an above-average rate compared to other companies or the broader market. Growth investors typically look for companies in emerging industries or with innovative products and services that have the potential to increase their earnings rapidly. These companies may not pay dividends but reinvest their profits into expanding their businesses, making them appealing to investors focused on capital appreciation rather than immediate income. Growth stocks tend to be more volatile than value stocks, but they offer significant upside potential. Successful growth investors focus on companies with strong growth prospects, a proven business model, and a competitive edge in their industry. This strategy is ideal for investors willing to take on more risk for the chance of high returns, especially those with a longer investment horizon. 5. Value investing. Value investing is a strategy made famous by legendary investor Warren Buffett, and it involves buying stocks that are undervalued by the market. These stocks typically have a low price-to-earnings (PE) ratio and may be overlooked by the market due to temporary challenges, such as management changes, bad press, or industry downturns. Value investors believe that the market has mispriced these stocks and that over time, the stock price will rise to reflect the company's true value. The goal of value investing is to buy stocks at a discount and hold on to them until the market realizes their true worth. This approach requires patience, research, and a keen understanding of the fundamentals of the business. Investors look for stocks with strong balance sheets, low debt, and solid earnings potential. While this strategy can be time-consuming and may involve waiting for long periods before a stock's value is recognized, it offers the potential for significant gains when executed correctly. Making money in the stock market is possible using various strategies, but the key to success lies in understanding each method's risks and rewards. Buy and hold investing and dividend investing are ideal for long-term investors seeking steady growth or income, while trading, growth investing, and value investing offer opportunities for those willing to actively manage their portfolios and take on more risk. Whichever strategy you choose, it's essential to conduct thorough research, maintain a diversified portfolio, and invest with discipline to achieve consistent results in the stock market. What do you think of our video? Let me know in the comment section below. Also, subscribe to our channel before you go. Thanks for watching.